You want to be in the know, right? Get the crucial information without wading through endless reports.
Yeah, get straight to the point.
That's exactly what we do here. Welcome to the Deep Dive. We take a really focused look at key sources to bring you the knowledge you need efficiently.
And hopefully make it interesting along the way.
Exactly. Today, we're zeroing in on Saregama India Ltd.
We've got the latest from their board meeting, the one held on May 15th, 2025. We're going to unpack what it all means.
Right. We've gone through the official stock exchange announcement, the full audited financials, both standalone and consolidated, for the year ending March 31st, 2025.
And there's more, too. Updates on their insider trading rules and news about a new secretarial auditor.
So our mission, as always, is to pull out the really important stuff, the things that give you, the listener, a clear picture of what's going on with Saregama.
Okay, so where should we start? The financials.
Let's do it. Headline numbers first. How did they perform overall?
Well, looking at the big picture for the year, revenue from operations, it took a pretty significant leap.
Okay.
On a standalone basis, just the main company, they went from about 75,877 lakhs to 1,921 lakhs.
That's quite a jump.
It is. And then when you look at the consolidated figures, which, brings in their subsidiaries,
Right.
that growth is even more noticeable. It jumped from around 80,300 lakhs up to 1,017,136 lakhs.
So that larger consolidated number really shows the impact of the other businesses they own, yeah.
Absolutely. It underscores how much those different arms are contributing to the overall revenue pie.
Okay, so revenue's up strongly. What about the bottom line? Profits.
Yeah, profit for the year also saw a positive trend. Standalone profit edged up slightly from 20,299 lakhs to 20,330 lakhs.
Okay, a slight increase there.
Right. And what's kind of interesting is the consolidated profit. It came in at 20,424 lakhs. So only slightly higher than the standalone figure.
That is interesting. What might that suggest?
Well, it could mean a few things. Perhaps the profitability of the subsidiaries is, pretty closely aligned with the parent company right now.
Or maybe reinvestment.
Exactly. Maybe they're in a phase of reinvesting profits back into those subsidiaries for future growth. Or maybe other factors just led to that close alignment this year. It's something to watch.
Definitely something to keep an eye on. Now, before we get into the different business segments, there was something important about the audit itself, wasn't there? The auditor's report.
Yes, absolutely. The auditor's report came back with what's called an unmodified opinion.
Right. And for you listening, what does that mean practically?
It's crucial, really.
Yeah.
Think of it as a clean bill of health for their financial statements.
Okay.
It means the auditors are saying, yes, we've looked at these numbers and we believe they present a true and fair view, of the company's financial position and performance.
So good news for investor confidence generally.
Generally, yes. It's what you want to see.
Okay, so a healthy overall picture, clean audit. Let's break it down now. How did the different parts of their business perform? The segments.
Right, the segment-wise breakdown. If we look at the consolidated revenue by operating segment, you start to see the moving parts. Music is still a very strong engine.
As you'd expect.
Yeah, generated 62,484 lakhs. Then you have artist management contributing 6,931 lakhs. Video brought in 19,198 lakhs.
Okay.
But here's where it gets really interesting, the events segment.
Ah, yes. What happened there?
It saw a massive surge in revenue, just huge. It reached 28,523 lakhs.
Wow. Compared to what, the previous year?
Compared to just 1,344 lakhs in the previous year.
Wait, seriously, from 1,300 to over 28,000 lakhs?
Yep. Nearly a 20-fold increase. It suggests, either a major strategic shift or perhaps huge pent-up demand finally being met.
That's incredible. It makes you wonder if that's sustainable, right?
Yeah.
And what they plan to do with events going forward.
Exactly. It raises those questions. Is this the new normal for them or a one-off boom?
Okay, so huge revenue growth in events. What about the profitability of these segments?
So the segment results, the profit-loss picture adds more color. Music, as expected, delivered a healthy profit, 29,233 lakhs.
Solid.
Artist management was also profitable, though smaller scale, 273 lakhs. The video segment actually showed a small loss, minus 395 lakhs.
Okay, a small dip there.
But again, events really stands out. They posted a profit of 2,294 lakhs.
From a loss the year before, wasn't it?
Exactly. A remarkable turnaround from the previous year's loss of 647 lakhs.
Wow.
So it strongly indicates a very, very successful year for their events business, and that likely boosted the overall bottom line quite a bit.
So it seems like music is the steady foundation, but events provided a huge growth spurt this year. Okay, let's switch gears a bit. Balance sheet time. What caught your eye there?
All right, turning to the consolidated balance sheet, as of March 31st, 2025, total assets stood at 2,009,516 lakhs, compared to total liabilities of 50,840 lakhs. One figure that really jumps out on the asset side is intangible assets.
Right, that was quite large, wasn't it?
Yeah, 60,823 lakhs. It's a substantial amount.
Intangible assets.
Yeah.
Sounds a bit abstract. For you listening, what does that actually represent for a company like Saregama?
Think of it mainly as the value tied up in things you can't physically touch but are incredibly valuable. So they're intellectual property.
Like music rights, film rights.
Exactly. Their huge library of music rights, film rights, maybe brand names too. This large number highlights just how crucial their content catalog is. It's their core asset, really.
Like a treasure chest of content.
Kind of, yeah. On the other side, liabilities. Well, their short-term obligations, current liabilities, included things like trade payables, money owed to suppliers.
Okay.
That was 12,682 lakhs, specifically noted as not to micro and small enterprises, and another 8,120 lakhs in other financial liability.
Got it. Gives a snapshot of what they own and what they owe short-term. Now the cash flow, always important. How did the cash move?
Absolutely. Cash flow tells a great story. So the consolidated statement for the year ending March 31st, 2025, it shows healthy cash generation from their main business, their operating activities.
How much?
33,120 lakhs generated. Positive cash flow from operations.
Good sign.
Definitely. However, their investing activities, that saw a net outflow. Cash went out.
Okay, how much and why?
A net outflow of 22,060 lakhs. Now, what's interesting here is where it went. A lot was strategic investment.
Like what?
Buying property, plant, equipment, sure, but also significantly purchasing more intangible assets.
Adding to that treasure chest.
Right, and investing in things like mutual funds. But crucially, this outflow also includes a substantial amount related to boosting their stake in Pocket Aces Pictures Private Limited.
Ah, the digital content company.
Exactly. Saregama now holds 90.37% of Pocket Aces. So this significant investment in both intangible assets generally and specifically digital content via Pocket Aces, it signals a really clear strategic focus.
On digital entertainment, yeah.
Absolutely. That's clearly where they see major future growth, which makes sense in the media industry today.
So investing heavily, especially in digital. What about financing activities? Cash in or out there?
Financing activities also resulted in a net cash outflow. About 9,873 lakhs went out.
And the main reason for that?
Primarily paying interim dividends to shareholders.
Okay. So balancing investing in growth with returning some value to investors seems reasonable.
Yeah, seems like a balanced approach.
Now, away from the pure numbers for a second, there were a couple of other notable announcements from that board meeting, weren't there?
Yeah.
Governance related.
Yes, exactly. A couple of key updates on how the company operates. First, they announced the appointment of a new secretarial auditor.
Okay.
A firm called Miss Alwyn J. & Co., company secretaries. They've been appointed for a 5-year term, starting from this financial year, 2025-26.
Right. But that needs shareholder approval still.
Correct. It's subject to approval at their upcoming 78th Annual General Meeting, the AGM.
And just remind us, why is the secretarial auditor role important? Why should we, pay attention to this?
Well, the secretarial auditor basically checks if the company is playing by the rules, following all the necessary corporate laws, regulations, procedures.
Compliance, essentially.
Right. And this firm, Alwyn J. & Co., they have expertise in corporate law, these kinds of audits, securities law. Plus, the announcement mentioned they are peer-reviewed.
What does that add?
It just adds an extra layer of credibility. It means other professionals in their field have reviewed their processes and standards. So beyond just ticking boxes, having a well-regarded, peer-reviewed secretarial auditor can actually boost the company's reputation and investor trust.
Makes sense. Okay, good point. And the other announcement that caught our eye was about insider trading rules.
That's right. Saregama adopted an updated insider trading prohibition code. It took effect right away on May 15th, 2025.
Updated, so they had one before.
Yes, and interestingly, the announcement labels this version 3.00, which suggests, they've revised it before and are keeping it current. refining their policies in this really important area.
And the goal of this code?
It's all about regulating, monitoring, and reporting trading in the company's stock by people who have inside information. And crucially, ensuring fair disclosure of what's called UPSI.
Unpublished price-sensitive information.
Exactly. Basically, any important info not yet public that could affect the stock price.
Yeah.
It's fundamental for market transparency and trust.
Absolutely vital. Keeps the playing field level, or tries to. And if you listening want to dig into any of this yourselves, see the actual documents.
Yeah, all the detailed financials, these announcements, it's all publicly available. You can find it on Saregama's own website, which is www.saregama.com.
Okay.
And also on the stock exchange websites. That's the National Stock Exchange of India, www.nceindia.com, and BSE Limited, www.bcindia.com.
Perfect. So all the primary sources are right there if you want to go deeper.
Definitely worth a look.
Okay, so let's try and quickly summarize what we've covered in this deep dive on Saregama.
Yeah.
We've seen really strong overall revenue growth, healthy profits in their core music business.
Mm-hmm. And that really impressive turnaround in the events segment. Huge growth there.
Huge growth. They're also clearly investing strategically for the future, right? Especially in digital content with that increased Pocket Aces stake.
Yep, significant investment signals there.
And they're keeping their governance practices up to date. New secretarial auditor, revised insider trading code.
Putting the pieces in place.
So I guess the big question to leave you, the listener, with is this. Considering Saregama's mix of businesses, the reliable music, the booming events, the growing digital side via Pocket Aces, what do you think will be the most impactful drivers for their future growth?
Yeah, how do all these pieces fit together going forward? It's definitely something to think about.
Absolutely. And as we do check out those source documents on the websites mentioned for an even deeper understanding.
Because really, getting comfortable with these kinds of company disclosures, it's a powerful shortcut to being genuinely well-informed.
Couldn't agree more.